Morning, everyone, and thanks for joining us. It is, as Nalini suggested, a great privilege to chat to you today. And the topic they gave me was quite difficult, so I did take a little bit of a detour, and we'll do very interesting look at very interesting data and graphs that are not in the traditional investment landscape. But I'm hoping to leave you with a little bit of optimism, obviously not too much because we have to be realistic, a little bit of a guide in terms of what you need to look out for in order to see whether some of the structural reforms that are being undertaken are actually biting and they're working. And hopefully, when I hand over to Alex, you'll be ready to receive a masterclass in thinking about infrastructure, how to do infrastructure the right way, and how we could possibly replicate that in South Africa. But as I mentioned, my topic was quite difficult. And the key themes that came out when we were chatting to our clients was they're facing two issues. One is the negativity of the news cycle and actually trying to abstract from that and trying to build robust portfolios is not an easy thing. And the second was to actually try and diagnose what the issues are. So what are we trying to actually think about? What are we trying to address? And why are we even attempting to look at this? What are the problems, the real world problems that investing in listed infrastructure, for example, aims to tackle? So, we did two things. We went and looked at some of the existing research and leaned quite heavily on that. And we also looked at some of the forums that people participate in, those who are in positions of influence, and analyze what they are actually worried about. So without further ado, let's get started. This is a word cloud, and effectively what the World Economic Forum went and did was analyzed all of the speeches that were given at the UN General Assembly through 2023. And here you're looking for common themes. You're looking for common words that show up with increased frequency, and you're also trying to get a sense of what the themes are. And you can see things like climate come up quite strongly, things like security, peace and development. One of the things that we try and encourage investors to do is to diversify their portfolios so their portfolios can be robust to changes in regimes. Unfortunately, things like these are undiversifiable, right? These are structural impediments that can only be addressed with structural interventions. And listed infrastructure is one of those tools that you can use to alleviate some of these. For example, if development is your issue, you need to build roads, you need to build bridges. That sits firmly in the development bucket and can be addressed by investing in listed infrastructure. But this is a bit, pie in the sky. It's not quite what we're looking for. It doesn't give us a sense of how these themes are connected. It doesn't give us a sense of what can we address in these themes so that these concerns can start being alleviated. So the second thing we went and looked at is something called a network graph. And this comes from some work, once again, out of the World Economic Forum. And a network graph has three important things, really. It's the size of the bubbles. So the bigger the size of the bubble, the more important that risk perception is to some of the participants. Not only the size of the bubble, but also the size of the interconnection. So the thicker the interconnection between the various issues, the more important and interconnected those two issues are. And thirdly, how far away those bubbles are from each other. So the closer the bubbles are to each other, the more related those issues are. And then you go and try to categorize all of these into themes that you can hopefully identify, have common drivers. And you can see, out of the participants of, the World Economic Forum over the last 2 years, and out of the UN General Assembly, and some of the speeches that have been given there over the year, the big themes are really, societal risks and what people are worried about. My eyesight's failing me. So in the red, societal risks, in the orange, geopolitical risks, and in the blue, economic risks, right? So those are all interconnected. But you've also got in the green that's economic. What is that? Environmental. And in the purple, you've got technology. And those sit fairly far away from each other. But as the graph suggests, there are various mechanisms that connect the two. So all of these concerns are actually quite connected. So in order for you to start alleviating them and start to address some of these risks, you need to take a multi-pronged approach. And for example, societal and environmental, large-scale migration can be the mechanism or the transmission between those two issues, between different geographies. So, in trying to appreciate these complex issues and trying to address some of them, I think it's quite important that we appreciate how complex the problems are and how multi-pronged the approach is going to be in trying to address these. And coming to the theme of multi-prongedness, given that geopolitical risks and given that societal risks have been identified as some of the biggest issues that people are worried about, 2024 might be a watershed year. You've got a record number of people going to the elections, over, I think it's 4 billion, the number of Earthlings are going to choose new leaders in national elections across the world. 3 of the 10 biggest economies are going to elections. So, hopefully people will use their voices to hopefully elect leaders that will help them address some of those concerns. So on the left-hand side, you can see the story count of elections year to date. There's a clear increased trend. And as we go into some of the bigger elections, so India and America, it wouldn't surprise me for the story count to increase quite dramatically. And you've just got the number of people on the right-hand side going to elections. So it's no surprise to us that elections as a theme has become quite topical, even to our own clients. Now, we always say we don't know what the future holds. So in trying to appreciate these complex issues, we need to be quite humble about what we think we can say about market returns in turn. An example of this, which is something that we use quite regularly internally to keep ourselves honest. If you look at market returns over the last 2 calendar years, so 2022 to 2023, if you had been worried, for example, about recession and you had seen poor returns in 2022, if you had conditioned that, and that was your starting assumption going into 2023, you were probably not going to be well disposed to holding risk assets because the economy is going to go into recession. It's going to put pressure on corporate margins and employment, and returns are likely to be poor. What ended up happening was the complete opposite. So this is just to say, yes, you can appreciate some of those risks, but in the world of investing, those risks don't help us in any way to build robust portfolios. What we try to do is try to understand the fundamentals of various asset classes and try to understand whether we're being compensated fairly for economic risks that we can see. The non-structural risks sit in another bucket that probably has very little to do with what near-term to medium-term returns are going to look like. If you don't believe me that it's not just a flash in the pan, we went and looked at the performance of the JSE over time. So in the green line, in the gold line, you've got the price on a log scale. So this is growing quite neatly over the period. And we've also charted earnings. And 2 things stand out. South Africa has been buffeted by a number of events over the last 34 years. But the price of the stock exchange has been going up. So that tells you that, trying to build portfolios on the basis of anticipating events, anticipating what events are going to mean for price action is not helpful. It doesn't help. If you had simply looked at the earnings ability of these companies, you would have probably made the conclusion that's been vindicated by the price, that the price is going to go up. So yes, there have been many elections. I was chatting to a client yesterday, and if you look at the performance of the JSE, for example, over the last 24 years when we've held elections, in the election year, going into the election, typically what happens is the stock market actually falls. and then has a massive rally after elections. It's only in one election where that didn't happen, which was 2004, and there were other things going on that dominated the narrative. But really, focusing on narratives for us is not helpful. But there is a place for it. Closer to home, when we looked at, what are some of the concerns that our own authorities and our own governments are concerned about, we did the same. We took the latest budget speech and created a word cloud out of it. You can see, infrastructure, budget, debt, growth. Those seem to be the key concerns that people are worried about. And once again, those are undiversifiable risks. How do you actually deal with those? Well, you need to embark on structural reform to ease some of those bottlenecks. But similarly to what other people are worried about across the world, infrastructure is typically one of the catalyzing interventions that help to deal with this. But you'll see on the next slide, we have an issue. So this is gross fixed capital formation. Quite a big word, as a percentage of GDP. This effectively tells us how much we're investing in infrastructure over time, and we've compared it to a select suite of our major trading partners and some emerging market countries. South Africa is that gold dotted line. We're lower than everyone else. So given that we've got a massive infrastructure backlog, we're spending way below what we should be spending. Some estimates indicate you should be spending between 25 to 30% of GDP in SA to catch up on the infrastructure backlog. So not only are we not spending well versus what we need, but if you compare us to some of the people that we're competing against in global trading markets, we're also spending less. Now, why is this important? Infrastructure typically leads to structural change, and structural change should lead to higher potential growth. Higher potential growth rates typically help companies improve their marginal return on investment. So if you're not going to be getting or producing or creating an environment for companies to be able to innovate, to trade with ease, and to bring in the necessary skills, if there's a shortage locally, then you're stuck. And I think one of the key learnings over the last 10 years in SA is, it's not just the level of spending, it's the quality of your spending. So if we look at what we spent the bulk of our infrastructure on, in 2007, we embarked on a build program to build 2 mega power plants, Medupi and Kusile. They're still not complete. They're running way over budget, way behind schedule, and barely meeting specification. What that means is the power that we're relying on to come on stream in 2015 and onwards has simply not arrived. So if you look at Eskom's available power on this chart over time, the green is what they can send out to us, which is quite astonishing. The blue is what you expect. That's planned maintenance. If you're running your grid well, if you're running your plant well, you should have a maintenance program to ensure that carries on going forward. The real issue, and really the nub of load shedding and the nub of poor capital allocation, is that pinkish guava bar. You should be alarmed when your unplanned outages are running at triple the rate of your planned outages, right? And this is where you start wondering, where on earth is the optimism? This guy came up and he said he's going to give us some optimism. We've been speaking a lot to Eskom, and we've been speaking a lot to the presidency, specifically the unit that's in charge of implementing structural reform, headed up by Rudy Dix. And some of the structural changes that they've implemented, so functionally separating Eskom, why is that a good thing? Because if an organization is too complex and too big to run, you simply can't move as quickly as you need to fix some of the structural issues. And secondly, they needed to deal with the financial performance of Eskom. So Eskom is caught in what's called a death spiral. Utility death spiral, where the number of your customers is going down over time. The only way you can meet your operating expenses is to keep increasing the tariff, which then feeds into other people leaving the grid and finding alternative power. Now, because we didn't build the power stations as well as we should have, and because of some of the nefarious things that have happened at the various power stations, that guava line was increasing. You can see the trend increase in the first half of this chart. But from sort of May 2023, that's been going down. And the reason it's been going down is because the blue line has been going up. So planned outages, they've taken power stations off the grid. They've put in some repairs, maintenance capital, and are returning those, and those power stations are actually performing to spec and managing to ease the burden of load shedding. So I'm optimistic that, that pink bar is going to reduce. It was at 37% in May of 2023. It's come down to about 28% in a mere 9 months. And if the trend is to be believed, it should be half of that by the end of the year. And that provides some comfort that, in order for us to be able to grow, the binding constraint on growth has been electricity. If we can ease that, then we can start doing other things that will help elevate our potential growth rate. But once again, it's not just about spending the infrastructure. You have to be spending the infrastructure in the right way, allocating it appropriately. And we simply haven't done that. But clearly, some of the structural interventions that have been taken are geared to addressing that. So, my cause for optimism is I'm hoping next year when we have this event, we'll stop talking about Eskom and load shedding, and we'll start talking about other more interesting and exciting topics